Gold prices took a bit of a tumble this week, as did many other riskless assets, trading off about $50 from the highs that we saw. Basically, with our DAX jobs reports, we saw the China-U.S. trade deal maybe coming to some kind of a peaceful resolution. We saw some things over across the pond not take us to the next level. And we saw Treasury yields rally, we saw equities rally, and we saw gold prices sell off quite aggressively. Although I will look at gold prices saying this, while we did see a major sell-off from those highs, we didn't necessarily see us switch over into bear territory. I think key level here is going to be 1,500. We can stay above that, I think, for the time being, maybe get a little bit of a sideways trade there. That could start to build a home. We could probably see us make move back higher again if things don't pan out the way the Fed wants, if China and the U.S. can't get their trade deal together. And likewise, if something happens with Brexit. Brexit's right around the corner at the end of October right now, and it seems to me that the market is still very uncertain on how to price things. Gold will be a very good insurance policy against that, as we've seen the rally in gold this year. And if you look at the dollar's been very, very strong, hitting its highest level in a long time, but it did see a sell-off late in the week, and I think at this point, the dollar will continue to struggle. Is it going to be a trade based on economic data? The Fed? Is it going to be about China? Is it going to be about what's happening overseas? There's a lot of what ifs in there, but the dollar has been resilient in going higher. And if you look at the way gold prices have reacted to that, they've gone higher. So it's been a very independent trade between the two. So while we saw the gold coming off, we saw the dollar coming off together, like we saw them rallying together over the last several weeks. So right now, a bit of a disconnect between gold prices and the dollar, but the dollar coming off nonetheless. Lastly, let's look at positioning. Part of the reason for that $50 decline, those spec longs, which were at the highest level since 2016, they're running for the exits. And I think at this point, they want to reload if we do get a touchdown towards closer to 1,500. If there is some kind of uncertainty out there heading into FOMC right around the corner, likewise, if something heading into Brexit also down the road, they're going to look to reload at lower prices. So at this point, a lot of that sell-off, I think, were speculators looking at profit taking and then maybe looking at reloading at lower prices. Right now, let's see if we can hold the 1,500 line, which we are doing currently. But as we get closer to FOMC, I anticipate that we'll start to see those spec longs and those insurance buyers come back into the market. Likewise, we'll probably see Treasury yields creep a little bit lower. And no, I don't think equities will go down right now. They're still leaning on hoping for the Fed to cut more aggressively. I'm sure they'll be disappointed, but gold prices right now, for the longer term, look for higher prices, look for higher highs met by higher lows as formations continue in that pattern, as we wait for the Fed, as we wait for China and the U.S. to get their trade resolutions down low, and as we head closer to Brexit and year end, a lot can happen, but gold should remain in favor as we look at those dates ahead.